Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we are going to finish off with the series of the EMA envelope with Williams percentage R. This is going to be most probably the last part and the fourth part of the series which we started last week. I hope you are well familiar with the functionality of the EMA envelope and the Williams percentage R. Then we are also using the min-max and the ATR for further optimizing the entry and exit points. Before we go into the details, this is a standard disclaimer. I would like to remind you that this is simply a tutorial session to help you build an efficient algorithm, and no claim is being made regarding the profitability or otherwise of the algorithms which you will be developing during the sessions. Suppose if you want to use any of it, I would suggest that you do extensive trial runs and also allow it to run for the sufficient enough time on the demo accounts to get a clear idea of the efficiency of the algorithms. And finally, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Now we go back to the chart, and here this is a brief summary of what we are trying to execute using the algorithm. So we want the buy trades to happen when, after being in this bearish trajectory, the EMA envelope turns the corner and starts to rise. So for that we are comparing the current EMA envelope's low band and the high band values to the value a day back using the shift 6 on the 4 hourly time frame, and also to make sure that this is coming in after being in the oversold territory. So we will be checking on the Williams R condition as well, and we will be putting in the restriction that the Williams R value should have been below -70 a day back, and only after being in oversold territory there is this new start of the trend, and we just want to get involved during the initial hours of this trend. And same thing we are going to do for the sell trade, just in a inverse fashion. Here we will check for the overbought conditions, and then the trajectory should turn from being in the bullish territory to getting into the bearish territory. That is, the value should start to fall compared to the prior EMA envelope bands values. So that's the key. And then we are also using the min-max levels of last 12 hours and the average true range as well to determine the entry and the exit points. Now we take a brief look of what we have done so far on the Visual J Forex platform. This standard instrument subscription, this time around we are using the USD JPY. Then the position amount has been defined at 0. So if there is any open or pending open position, then no trading will happen. EMA envelope bands, shift 0 and shift 6 defined at 4 hours. Williams percentage R to determine the overbought or sold territories. Then the min-max condition for giving us a clearer view of the recent highs and lows. Min-max conditions on the 5 minutes to just steer clear of any undue volatile moves just prior to the execution of the trade. Then these values using shift 4. So we will be comparing the current min-max values with the values 2 hours back, and we will define some conditions. Then here we have done the ATR's 20%, which we will be then utilizing for defining the entry point. And here these are historical candles of 10 seconds. So we will execute the trade only when the price starts to rise above this level, which is going to be 20% of the ATR added to the minima of last 12 hours. Then here we have got these values of the stop loss and the target. They are going to be dynamic and depending on the instrument volatility, it will keep varying from time to time. So we were done so far. Now coming to the buy side, we have developed the buy side till yesterday's session. Now today we will add the sell side, and if the time permits we will do some test run as well. So here these are the if conditions which needs to be fulfilled for any trade to happen. The high band's value should be higher than the prior high band's value. The current low band's value should also be higher than the prior low band's value. The Williams percentage R current one should be higher than the prior one, and then the prior one's value should have been less than -70. The current minima should be equals to or greater than the minima 2 hours back, and we are also checking for the minima of 1 hour current minima to the 1 hour's minima 15 minutes back. So here, and then when the price starts to rise, so we will take the shift one candle, and it will be needed to have closed above the buy execution price, and the candle prior to that should have closed below the buy execution price. And then we have this buy order which is going to be placed with 0.1 million in the lot size, and the slippage and the stop loss and target size as we have defined. Now let's get back to the business. We will need to add the conditions on the sell side. So we take in the couple of if blocks. We are going to need 8 of them, if am I not wrong. So first we compare the low band to the prior low band. We compare the current high band to the prior high band. So here and we want it to be lower, so we start to connect as well, and it should also be lower. So we have done this defining the conditions for the EMA envelope band. Now we shift our attention to the current Williams R value should be less than the prior Williams R value. Again we need to take a couple of if blocks. Now we want it to be less, so we take in the requirement, then we check for this. It should have been greater than, so let's go back on chart to make sure we are doing it right. It should have been greater than -30. Now the value is starting to fall, so we defined it at -30. Okay, so the Williams R should be less, and the prior Williams R value should have been greater. So we are done with the EMA envelope band and Williams R conditions. Now we need to work with min max. So here we take the current maxima of the ask side on the high price. We compare it to the prior maxima value. So here we again want the ask and the high price. We got it. And we want the current maxima price to be less than or equals to the maxima 25. So we check it should be less than or equals to. Now we again take the 5 minutes value. We want current maxima value of last 1 hour. So here maxima 21 should be less than or equals to we will need this one ask 23. So now we again take, so here we define it should be equals to or less than. Okay, so far so good. Now we are yet to define the sale entry price. We need to now do the calculation. We need to define the sale entry price for our entry purposes, and here we will need to deduct 20% of the ATR from the current minima, current maxima of last 12 hours. First we arrange this and then we do some calculations which are going to be essential for efficient execution of our trade. So here we arrange these conditions. And then we have to define the sale entry price. Okay, so we again go back to our calculations. Calculation expression. We want the maximum value, current maximum value of the high side. So here it is, maximum. Okay, so we want maximum 19, and now we will deduct the 20% of the ATR. So we will need to take this one and we do A1 minus A2, and the result of the calculation will be the SE. So we add it here. Now we also need to compare. We can connect this here also. Now we need to compare the candle closings. The value should be falling below our desired parameters, and to make sure that's the case, we have to take in these historical candle closing levels. We need a candle 29 close and the candle 30 close. So we bring in another A block here. First we will check for candle 30's close. It should have been higher than the sale execution price. So we got candle 30. Candle 30's close is all we need. Bid side, yes. It should have been greater than the SE. So here candle close needs to have been closed higher, and then comes the candle 29's close, and it should be less than the SE. That will mean that the price is starting to fall. And here also candle close, and then we need the sell execution price. So here it seems like we are done with most of the conditions. Suppose if you feel like I'm missing out on something, you can definitely remind me in the comment section. But so far it's looking good to me. So we add these two blocks here. Now comes the open market. So here is and candle close should be less than the input, and here instead of buy it should be looking for a sell. Instrument will remain as it is. The trade amount will be defined with 0.1 million, 0.1 million stop loss, and the take profit and all will need to take in from upper side, which we had defined yesterday. We will need to replace slippage. We make it 2. We cut down on the stop loss and we bring in SLP, the dynamic stop loss value for the target price is also going to be changed. So here it's looking good. Let's see. We will do test run, and if it's fast enough we can do it for even many days or weeks. Pardon me. Now we save the file and we export it. We started working on it on the 3rd of April, now it's the 8th of April. Let us see what kind of trading the algorithm will do so that we get a good idea of its usefulness for our purpose. We will save it here. Now we pick the same file from the the J4F platform. So and here we are almost. Okay, I got the file. We will need to compile it. So here is our code in Java. It's not too large either. It's under 1200 lines, so not that big. So hopefully we will be able to get the test runs done faster. compilation successful. We have compiled our algorithm. Now we test it, and for us to determine what are the areas which are likely to yield us some results, we will try for this one, the 15th week, and we start from 13 GMT on the 2nd April till 17 GMT on the 3rd April. So now we have successfully compiled it. Yes. Oh, we got it twice, so we have to do it again. Okay. Now the account will remain as it is, 50,000, experiment also as it is, and we get the custom. Oh. So the time was 13 GMT on the 2nd April. So we put in 13:02:04:04 2. Oh, here I made a silly mistake. Okay, we are good. Now let us see if it is able to give test results fast enough, or we might need to cancel the testing midway. So here we are. Run. It's taking a fair amount of time. We will try it for a couple of minutes. Okay, it has started. We will use this for a day only, as we don't have the luxury of time. And then, suppose if you are convinced that this is a good idea and you can try it on your own, then I would suggest that you also build the algorithm on the in line with what we have developed during the session. You can always do some modification, some adjustment here and there to make sure that other parameters as per your requirements are also fulfilled. So that is something you can always do. So on that note, for the day, I would like to sign off. As here you can notice that it's going to take fair amount of time. So instead of waiting out for all the tests to happen, the testing I would recommend that you do it on your own, and then see how it goes. See you tomorrow. Have an excellent day ahead. Goodbye.